I'm going to do a short little video this weekend and show you why it's a bit dangerous to try and catch every penny, especially in the silver market. And we see this at every top. Whenever I start to see signs that we may be forming an intermediate top, and I suggest maybe it's time to take profits. You know, people by that time, because the market has gone up for so long, people have become kind of quote unquote brainwashed into thinking that price can only go higher, and so they're they've got a severe case of FOMO, and they're worried they might miss some more of the rally. Now, as I pointed out, we caught all of the rally from September 10th to Wednesday is when the warning flags started popping up, and I suggested maybe it was at that point maybe we just made enough money. Maybe it wasn't critical that we catch any more of a rally, if there was any more. And again, I'm going to show you why here in just a minute. But I told subscribers at the time, you can either choose the bird in hand strategy or the two in the bush strategy. We had been leveraged since September 10th. So most everybody, depending on what strike they bought and such, are up anywhere from 60 to 100% in 2 months. And if you can't be happy with that kind of gain, and we had that kind of gain earlier in the year as well, so we've had our best year ever. But if you can't be happy with that kind of gain, and you are so enchained by greed that you cannot miss any more of the rally, if there is more, then you got some problems, and those problems are going to get you caught at every intermediate top, and they will absolutely get you caught at the bubble top whenever it comes several years down the road. But anyway, the warning flags were popping up. Wednesday, I suggested maybe you might want to take the bird in the hand strategy and not worry too much if there's a little bit more and we miss that. Just lock up these huge gains, make sure you don't give them back. And I've been adamant that subscribers have my suggestion was have 80% of your investable capital in physical gold and silver, and that we never sell. So we'll catch every penny. If there's more upside, we're going to catch it with our physical, and we will of course get caught in every intermediate degree correction along the way. But if you're in physical, you're not tempted to panic sell at the bottom of those. You just hold through them. You never even give it a second thought, and then you ride the next rally up to higher highs. So it's not like we were really going to miss anything if we get out a little too early. We're gonna catch all of it in our physical. But let me show you what happens here. And actually, let me back up a little bit. I'm going to show you what happened in 2011, because maybe tried to catch every last penny. Okay, this is just kind of characteristic of silver. It's a thin market, and it's very volatile. And if you hang on 1 or 2 days too long, you can give back a serious amount of your gains. So we had a reversal candle right here, and I know a lot of people that may have decided it's just close enough, and they're going to take profits here, and then of course they missed this. But if they held like even 2 days too long, you lost most of that. 3 days too long, you lost pretty much all of it. And then at that point, you're sitting there thinking, well, I can't sell now. I got to wait for a bounce. And then by the time this actually did give a very feeble bounce, you'd already lost all of the gains, and a lot more than the people that had just been cautious and sold right here. But this is what happens with silver, because it is a thin market and very volatile. If you hang on 1 day too long, 2 days too long, you can take serious damage. So when you're playing with silver, it's better to be a little too early than a little too late. So let me go through some of these tops. All right, here's another one. Big move up. Sure looks like it's going to go back up and test $50. I'm going to hold. I'm not going to sell. And then all of a sudden, bam, you held one day too long. And if you didn't get out, either then or the next day, man, did you mess up. You got caught in a major intermediate decline. All right, over here, held on one day too long. Holy crap, what a loss. Again, one day too long. Big move down. Kind of one day too long, but if you kept holding thinking it was going to come back, man, were you wrong. Same thing. Held one day too long. Now you're in trouble. So you get the picture. So now let me go to our current market. We were hoping to get a ballistic phase. The opportunity for the ballistic phase was before the election. I mean, it could come after the election, but in my opinion, there's too many warning signs. And even if it does, if you hold on one day too long, you're going to end up getting caught in the decline, and you're not going to be able to keep those gains, is what I'm saying. And you'll end up, by the time you realize that you got to get out and get out of the way, you will end up getting out lower than we did. This is where I called the exit was right here on Wednesday, and you could even get out Thursday morning, and it's not that much different. But if you've been brainwashed into thinking that it has to have a ballistic phase, and you're going to hold on for the ballistic phase, it's a crapshoot whether or not you can control greed and get out in time and not get caught in those. What very often is you hold one day too long, and then you lose all of your gains in one day. So you held and you held and you held to catch that last little move, and then you caught that last little move, but you didn't pull the trigger because that last little move looked like maybe it might have one last more little move, and you get caught and you give it all back anyway. So that is just the nature of silver. It's a very thin market, and it very often, when the top comes, if you hold one day too long, then you just defeated the whole purpose of trying to catch every last penny of the rally anyway. So it's way too late in this intermediate cycle for there to be a big sustained move in gold. At most, I thought we might be able to add another $50. Our opportunity for the ballistic phase in silver was, it should have been right here. Zoom in a little bit. Should have been right here. Silver should have immediately recovered this sell-off day here. Should have recovered and made new highs. That would have set up the ballistic phase. And then every one of these days would have been a monster up day. And that would have given us our ballistic phase. And then, this day here probably would have been the huge, you held one day too long, the huge collapse where it all gets given back and everybody gets caught at the top. But that didn't happen. I'll be the first to admit the cartel won this battle. They trapped silver in this coil right here, prevented it from following gold. Gold was still going higher. Silver should have followed gold higher. It should have unleashed the ballistic phase in silver. But the cartel trapped this, and then, of course, we're getting margin hikes that are going to probably prevent this from continuing the intermediate rally anyway. But understand how silver works. You can get this mindset that you got to catch every penny, but if you're not lucky enough to get out, control greed and get out when it most looks like it's never going to come down, then you risk getting caught in the 1 day too long type of event where silver just collapses the next day and you lose everything anyway. So I don't know that you're going to do yourself a whole lot of favors trying to catch every penny in silver, because probably 95 times out of 100, you won't time that perfect top, and then you'll get caught on that one day too long, and you'll give back all those gains anyway. And so I can tell you exactly the mentality, the people that are caught and didn't sell, and now they're writing this down. They are assuming that this is going to be the same as it has been. Well, first off, they've gotten brainwashed into thinking that price can only go up, because it has only been going up for a long time, and that's what's happened. Down here at the bottom, I couldn't get anybody to buy because price had been going down for a long time. So down here, everybody knew that metals were shit. They would never buy miners again. They're crap businesses. They're worthless. I don't ever want to, I don't ever want to mess with precious metals again. That's the sentiment down here. And the reason you have that sentiment is because you had months of going down and down and down. Now it's the exact opposite. Once we started this rally, and we caught this rally and made a lot of money here in the first part of the year, but it took a long time for people to jettison the mentality that metals only go down because of this, and most people they really started to get bullish once we broke out above this. Now they're bullish, but now we start this nonsense where you get a breakout and then you give it back. And so, people are buying up here because finally they're convinced. And then right after they buy, they get a sell off and they panic sell. So they lose a little bit of money. And then we get another rally and it kind of breaks out and it's, okay, this time's for real. So they buy up here and then you get another sell off and they panic sell and they lose more money. And on and on and on and on. Over and over and over. Till now, because this pattern has gone on so long, now they've become brainwashed into believing that, hey, this sell-off is going to be exactly the same as this one and this one and this one and this one. And at some point, it's not. It's not going to be the same. It's going to come down and make a lower low. And that will be a sign that we've started an intermediate degree correction. And as I said, I've gone over in the SMT the many red flags that are popping up that this is different now than this or this or this. For one, sentiment is wildly bullish, and it has been wildly bullish for 3 months. We haven't really had any kind of significant correction since February in anything but silver. Silver had a recognizable intermediate cycle low, but gold, mostly just went sideways, and miners have just been in this choppy, erratic, slow uptrend. But this has gone on so long that people have become brainwashed into thinking that there's no possible way that this can go down. The fundamentals have somehow changed, and they haven't. The fundamentals here are exactly the same as the fundamentals here. The only difference is sentiment. Here, sentiment had gotten very bleak. Everybody was negative. That was the fuel for this. Now this is the opposite. Everybody is bullish. Nobody can see any way that price can correct. And so that is the fuel for an intermediate correction. And then once the intermediate correction has run its course, then we'll be in the same sentiment situation as we were here. And building this kind of negative sentiment can occur in one of two ways. It can either be from a serious drop in a somewhat short period of time, like 4 to 6 weeks. If the miners come all the way back down here to the 200-day moving average over the next 4 to 6 weeks, that'll do it. Sentiment will be, dark bearish. And that's the fuel for the next rally. If we chop a lot and, it takes into January to get down maybe to the 200 or a little below, then that would be a more gradual decline. And in that situation, we might not even have to come all the way down to the 200-day moving average, because we'll add a time factor into it as well. So you can clear this sentiment either by a quick, devastating sell off sharp, a lot of percentage loss, or you can also do it by just a lot of time going by without making any new highs. So I don't know which it's going to be. Either we could kind of crash all the way back down here over the next 3 to 4 weeks, or we take 8 weeks and we come maybe back down here to $37. Either one of those would accomplish what needs to be done, but we need this kind of sentiment again that we saw back here at this bottom, and that's the sentiment that will drive GDX up to that next resistance zone, which will be the all-time highs at, I think it was a little above $60. But we've got to have this kind of black bearish sentiment in order to power that rally up to those all-time highs.